Hello, today we ask the question, have markets become linear? Well, if we look at the S&P over the last few weeks, over the last few months, over the last few quarters, even over the last few years, it may appear to be so. And in such case, there's not much point me being here. That said, many assets are still non-linear, and we believe the linearity of the S&P may be taking a pause over the next few weeks. We'll look at this on our FinGraphs platform. We first start with the S&P 500 on a weekly chart or the perspective over the next few quarters. As we can see, from early 2016, the S&P has been moving in a linear fashion. We believe this linearity is probably not quite over yet. We are still in a bull trend. We may be getting a bit overextended. Our envelopes are starting to touch each other. We have reached our initial impulsive up targets, yet our risk index is not yet in the overbought zone. So that tells us that it's probably a few more quarters to go. Looking at the daily chart or the perspective over the next few weeks, we can make a similar analysis as for the trend. It is still heading up. In terms of targets, we've passed above our impulsive targets and are looking at impulsive 2 targets. So although they may warrant a bit more potential, we're still already very extended. On the risk front, well, envelopes are touching each other, and that's showing us that we are in a market stress situation. And our risk index is now in the red. So the S&P over the next few months, well, could take a bit of a breathing. Now let's look at the hourly chart. And the hourly chart has also been quite linear over the month of September and October. It has seen a bit of volatility lately, but at the moment it is also still heading up. We're also above our impulsive targets, looking at impulsive 2 extended targets, so we are already quite high. Yet, if we look at our risk index, we're not quite in exaggeration yet. That said, our envelopes are also touching each other, so we can't be too far away. Summarizing all three, we're still quite comfortable with the S&P over the next few quarters, although there may not be that much potential left. On the daily, we think we're probably arriving towards an intermediate top, and we could see a few weeks of consolidation. On the hourly, that consolidation is not yet apparent. It may extend slightly more, but we believe that over the next few weeks, it should have turned. Now let's look at a less linear asset, and let's look at the euro-dollar. And the euro-dollar, following a huge fall during 2014-2015, a long flat until 2017, is now in a correction up. You could see this because the price projection is still in gray. It hasn't confirmed a strong uptrend yet. And that correction up has reached our corrective target zone, and it has started to reverse. So at the moment, we would be in a consolidation, in an uptrend, which is still only a correction, so it's not very, very strong. Now let's look at the daily. The daily had a very strong linear trend between March and September, has since topped out and is moving lower. Many people are seeing a complex head and shoulder here. Well, it may be possible, but often in markets what's obvious is obviously wrong. Well, if it was a head and shoulder, we would expect a bounce here. It just went through the neckline, so we expect a bounce back to the neckline towards the 117 area, and then to move down lower into possibly the 113 area. Well, we would have that kind of a projection here on our corrective targets. Our corrective targets are pointing lower into the area of 115.80 down to 113.10. Our risk index is still very much overbought, so that would confirm a bearish bias at the moment. Now let's look at the hourly. Well, the hourly, we believe, although it may have a last sell-off, is getting ready for a bounce. If we could look here, we're still in a downtrend with a bear figure in here. Our targets, well, we could still extend down to the lower 15, possibly 14 area over the next few weeks. Yet our envelopes have started to touch each other, and our risk index is getting oversold. Our view is that we could see a few weeks of consolidation up here on the euro before it eventually breaks lower. Now, if we look at all three charts together, we're in a correction up that has probably lived for now on the weekly chart. We're in a daily correction down, which is not quite over yet and could last a few more months and lead us down to 113 on the daily chart. And on the hourly, well, we're not quite oversold yet, but we're getting there, and we think that over the next few weeks, we could see a bounce. Now we look at a defensive asset, we look at gold. And gold, if we see here, and although the S&P has been very, very strong, is still hanging on to a slight uptrend in terms of our envelopes, all flattish, but still mildly heading up. And that uptrend could lead us into the 15,000, 16,000 area. That said, as you can see, the projection is cut here, so this is a projection which is quite far away. And we would expect these targets possibly over the next 18 months. So many things could happen over the next 18 months, and we believe that in the meantime, we should see some consolidation on gold. Now we look at the daily, and this consolidation has already started. And we can see that we are in a correction down on gold. We have pretty much reached our targets, or the target area, at least the upper end of it. And our risk index is not yet oversold, but has come down from the overbought and is slowly trying to turn. We believe that it is getting ready for a bounce here that will probably not see new highs, but could last 2-3 weeks and probably bring us up back above 1300. Now looking at the hourly, what we could see similarly to the euro is that we cannot exclude one last sell-off here. We're not quite as oversold as on the euro. And we would ideally want to act possibly into the 1260s, 1250s, 1240s. But we have come some way down, and we may be getting ready for some kind of a bounce too. What we could corroborate that with is that our envelopes are now touching each other and slowly turning up. Now, looking at all three, we're still in a very long uptrend on gold on the weekly, but we could see an intermediate correction. The intermediate correction is underway on the daily, could see a bounce, but over the next few months is possibly or probably not over. Now, looking at the hourly, it has come some way down. It's not quite yet oversold, but we believe it may be getting over the next few weeks in a position to initiate a bounce. Now, finally, we look at dollar yen. Dollar yen is a risk-on indicator. When the dollar is strong against the yen, it usually means that the market is positive and that risk assets are also moving up. And as you can see, we've had a strong move up into the 2014s, a flat into the 2015s, and then the first part of 2016, it was coming down. Although the markets were coming up, but many defensive assets were still very, very strong. Since then, we've had the reflation trade here, which we've seen in 2017, and now some retracement, waiting for the reflation trade to reaccelerate. And we believe this could happen over the next few quarters. We're not quite oversold yet, but it seems like our oscillators are trying to turn up. Our envelopes are heading up, and there's still quite a bit of potential to the upside on the weekly chart here. Now, if we look at the daily, it's been a very painful trade all through the year, and it's been consolidating down and making it into the oversold yet again and again. And it has now bounced back, and it's trying to move up above our corrective targets. That said, our oscillator is turning down a bit, so we would expect some work over the next few weeks. And once we are able to make it above 114.58 or 114.60, then we could see an acceleration start to materialize. So we're still corrective. We're hitting against resistance. We're probably going to consolidate a bit, but then we could start moving up again. Now, looking at the hourly chart is seeing the strong correction up move we've seen on the daily. It's slowly getting into its target, into the 114s or the lower 115s. So that if we do make it above, it would be a good sign on the daily. That said, we're already seeing quite a bit of stress on our envelopes, and our risk index is overbought. So here we would also expect a slight risk-off period, which could last 2 to 3 weeks before we could move up again and start to break up in earnest on dollar yen. and continue to move up on equities. Thank you very much and have a good week.